Are you interested in finding the best markets for investing in multifamily real estate?
Today we're going to tell you how to identify the best markets for coming out on top for both value and cash flow.
If you haven't already, click that subscribe button and ring the bell so that you get alerted every time we drop a new video.
There's a huge problem for real estate investors who are just getting started now. Either they live in a place where it's so competitive you couldn't get a deal if your life depended on it, or the prices are so high, it's just impossible to get into the game. And the problem with that is it makes so many people that could be starting to build cash flow simply give up and not ever do it.
Today, we want to introduce a new concept that might be new to you, and you don't have to uproot your family and move there. It's our strategy, remote investing. So remote investing, what is it? Well, it's where you live where you want, but you invest where it makes sense, where the numbers make sense, where your capital goes further, where you're not stuck in a seller's market.
Yeah. All right, so how do you get started with remote investing? Well, the very first thing you do before you do anything is you have to select a market, right? That's the whole topic of today. Choosing the right market can be the difference between building a portfolio of cash flow real estate that literally secures your future and sets you free financially versus buying an investment property that basically costs you money every month. Instead of cash flow coming in, you're paying for it. That's why market selection is so critical when you're getting started in multifamily real estate.
So getting into your right market, 3 things to look for. The first one is the 1% rule. We're gonna get into that in a minute. Second one, job growth. And the third is population growth.
If you're liking this video so far, hit that like button. All right, so Jen, I have a question for you. Why do you think so few people invest remotely, even though their home market is just garbage for building a cash flow portfolio?
I think it all starts with mindset. It's definitely a mindset. It's a mindset thing because if I can't touch it and go there, a lot of people get tripped up on that. They want to be able to control it and go there. And the fact is, like, you really can't anyways. I can't tell you how many of our students actually, when they were first enrolling, when I asked them on their case study interview, what was the one reservation you had about joining us? They always say remote investing. And then when I always ask the next question, the follow-up question, well, how did you get through that then? They realized that there was an opportunity to scale and that even if they needed a carpenter or a GC or a realtor, they weren't just gonna open their front door and holler out for them. They still had to do some research. And so why not apply that in a market where, you know, number one, they don't have to travel to it. So there's the cost of going there and doing it is less. And I think what it was for me was I had to ditch the DIY and the control freak nature and actually talk to somebody who knew how to do it. So mentorship and getting clarity on, well, this seems scary, but is it really scary? And is there a better way? But it's mostly mindset. And the way that they solve that is through getting the information, getting clear on what's a better way then. So fear keeps us from not even getting that clarity.
If you have found that you're like, oh, this sounds kind of compelling, I want to know like how to find the right market and I want to learn how to go to a place where my money goes further, but you've been stuck, like make a comment below. Let us help you out because certainly you deserve to build a portfolio of cash flow. And if you don't happen to live in a market where that works, there is a better way and we want to help you with that.
Okay, so back to those 3 things. I know you wrote them down. The 1% rule. What's the 1% rule mean?
So the 1% rule is one where you're looking at the prices of the homes in a market and you're looking at the market rents. And what you want to see is that the market rents are approximately 1% of the purchase price. So let me give you an example. I think that will make it a little easier. We used to live in San Diego, California. So if we're going to buy a single family home there, it's going to be probably $700,000, basic home, basic neighborhood. We could probably only rent it for $3,000. $7,000 would be 1%, but we couldn't get that. So that did not make sense as a cash flow market. And on top of it, like, oh my gosh, how much capital would it take to invest there? Yeah. So much, right? So if you look at another market, let's say you're somewhere in the Midwest where the numbers do tend to work the best. Let's say you're looking at a house that it sells for $150,000 and it rents for $1,500. Now you've met the 1% rule. Now, Jen and I, we are very much proponents of multifamily for rentals. I'm not saying there's anything wrong with buying a single family house as a rental. That's fine. We even have a couple of them. But overall, when you want to build big cash flow, to build freedom financially so that you can leave your job or at least have the option, you need to have a lot of cash flow. And what goes along with a lot of cash flow is multiple properties or multiple multifamily properties.
Multiple.
Right? So if you think about it, if you apply the same concept of the 1% rule to a duplex, if I'm looking at a duplex that is $150,000, I need the whole property itself to rent for $1,500. Well, I have 2 units in there. So even if both units rent for only $750, which in this day and age is becoming, like, rents are much higher than that. But even if they only rented for $750 each, now you are in a market where the 1% rule works. And we're not saying that you would buy a property or even analyze a property based on just that simple thing, but it does help you to really scale down the number of markets out there so that you're focusing on a market that makes sense, that's gonna actually help provide you cash flow to set you free.
Yeah, so the 1% rule is a tool that you can use to see if a market is worthy of further investigation for your investment.
That's a good way to put it.
Yeah. So the second thing is job growth. All right. So what are we looking at on a job growth perspective? What you're looking for in job growth is you're looking for, is it stable or at least growing? If you see job growth that's been stagnant and on the decline, no, don't go there. Even if it's a 1% rule, don't go there, because you want to see job growth on an upward trend, because people who have jobs can afford to pay rent. It's pretty logical. So the third thing is population growth. Now, why is that important? I can't imagine why that's important.
Right, so you want to make sure that you're always going into an area that their population is at least stable, right? Stable is like the beginning part. Ideally, it's increasing. If you think about it, it's almost easier to explain by talking about the inverse. So let's say that you were in an area where the population was declining, it was going down every year. So you have the same number of rental units in the market, but now there's fewer and fewer people. Well, what do you think that's gonna do to your vacancy expense? It means it's gonna take longer to fill your units because there's just not as many people there to fill them. Also, that could drive your rental price down. So for every imaginable reason, you wanna be in an area where the population is at a minimum just holding steady, but ideally growing.
Totally, because you don't want to be in a situation, it's like the law of supply and demand. If the supply is heavy but the demand is low, ooh, that's bad.
Yeah,
that's a bad mix.
bad news.
But if the supply is moderate or even, a little bit lower, but the demand is high, like that is killer. If you do want to get into multifamily real estate investing, but you're not sure what's the first step, the second, or the third, you can click the link in the description below and a member of our team will hop on the phone with you and talk about your goals, your resources, and how we can hold your hand and get you to where you want to be.
The other thing we want to tell you is that we have a free Facebook group. It's called Multifamily Real Estate Investing. So if you want to be around people that are like you, on the journey, looking to learn, come join us in that Facebook group. We do tons of free education and content there. And every week, Jen and I make ourselves available for a question and answer session. It's live, it's in Zoom, we're face to face. You gotta come to the Facebook group, register, go to events, and then we'll see you there. But any questions you have about real estate, we're there to answer them for you. If you want to learn more from us, we did this whole masterclass about how to find and select the right market. So you can click over there, watch that masterclass, start learning, and start making stuff happen.
Yeah, we'll see you guys next week.